Ladies and gentlemen, if you are watching this at a later time, that's a-okay. We're going to show you how to find your process. We're going to go over many things here. We're obviously going to go over the S&P 500, the QQQs, the IWM, and quite a few other things that are going to keep you on track to understanding what's going on in the overall market. Well, let me tell you something. We're also going to go over the economic calendar. We're going to go over the CME Fed rate tool, and I'll tell you why that's so important. We're also going to go over the current U.S. inflation. So if you don't know, you'll know very soon. And we're going to go over many stocks that are out there. Why are we going to go over the stocks? Well, you want to know what's moving the market, right? So does everyone else. So let's just dive right into this. But first, I want to give a huge shout out to Dan. He's out here, baby. He's the best moderator alive, and you know I love him. And we have plenty of new faces out there in our Discord. And if you want to, you're more than welcome to join our Discord. It's absolutely free. We're going to be coming out with a, obviously, free beginner's trader course as well. I believe everything that you can find, just like I found it, is free. You can find it free on the internet. We're going to condense all the information just for you so you can learn how to trade the same exact back-tested studies, the timeless studies that I trade myself. But first, the first thing you want to do is have a strategy. You want to have a way of looking at the market, coming to the market, learning and understanding, having a set way of buying, a set way of selling, a set way of looking at the market before you even buy or sell, using risk management. We do all that here, and now let's begin. First and foremost, what we want to take a look at is the S&P 500. Obviously, we've been tracking the S&P 500 from its inception, right? 200 years ago? No. Since I've started trading, I've always used the S&P 500 as my main measure of how the overall market's doing. Why do we step back? Why do we look at the main measure as the S&P 500? Well, all tides rise sinking ships. I don't know the saying, but basically, if the S&P 500 is moving up, all the rest of the stocks are going to move up with it. Okay. And you're going to find that it's a lot easier, especially if you're a long bias trader, to follow the S&P 500. If the S&P 500 looks bullish, then when you take a trade, it will also be better bullish, right? It's going to be better to be in that stock when it's moving up with the S&P 500. All right. Vincent, good to see you, brother. Popped in. Have a good stream. Thank you. Dan Bob's here. Zamora. Good to see you. So, guys, with the S&P 500, we want to see, first of all, that it's above a 200-day moving average. We are clearly well above a rising 200-day moving average. Next is the other moving averages. We use the 50-day, we use the 10, 21, and the 30. And as I told you before, we are looking for some sideways action. After that bloody 6-day sell-off, and it broke below all of these moving averages, we've seen it pop right back up into the 50-day moving average. We knew that we were going to find some resistance there. We found that resistance, and it pulled back. Where did it land? The psychological area of $500. When it bounced off of there and we pulled back, I said to everybody in the Discord, if we hold that $500 area, we're going long, baby. We're going to step on the gas. We're not going to slam on that gas. We'll throw it in neutral. We'll go downhill, right, as we go uphill. It's probably a bad analogy. But we took some longs. We took Tesla. We took NVIDIA. What's the other one we took? I can't remember now. We took 3 different trades, and we rolled that to the north side. Okay, we made quite a bit of money off of this. But as I was telling everybody, when we smacked into that 50-day, we were going to wait. We were going to see what was going on. We broke through it. Now, when you have a big push with all of these gaps in between, you don't want to see this thing go straight up to all-time highs, because then we're probably going to come straight back down. I asked for some sideways action. Now, we got it for 2 days. This last day, so today, we pushed much higher, and we closed much higher. And even in the aftermarket, if we go ahead and take a little peeky gander, you can see we even pushed higher. We're trading at 520.84 currently in the overall S&P 500. Now, as happy as I would love to be seeing us way up there, breaking those new highs for the past 3 weeks. The issue here is we don't want to move too high too fast. Another issue here is if we look at the volume, you can see we're trading on lower volume. So I know we got one bear out there that decided a bear market heading down. Well, I'll tell you this, without seeing that volume coming in, it does make me a little nervous, but you cannot deny being above all of these moving averages. You have the moving averages starting to converge, meaning the 50-day moving average is still above the 10, 21, and 30, but the 10, 21, and 30 are now in order. So if you don't understand what I mean, look at this. When we get through this, see how the 10's below the 21, the 30, and the 50? But as we start to break up, as we start to form a new bull trend, you can see the 10 is above the 21, the 30, and the 50, right? So once we actually make that convergence right here, we break above and then we start to hold a new uptrend. Same thing with this. We break down and this starts looking like a bowl of spaghetti. As you can see, we start to break up to the north side, we start to head on higher, and then breaking out of that 50-day moving average that we first seen the first area of resistance, now breaking above it. We want to see some sideways action. Let the 10, 21, and 30-day moving average get above that 50-day moving average so that way we can continue on our bull run. So you cannot really argue with the way this is trading right now, but we aren't going to deny the fact that we are on lower volume, okay? So we always want to take a big, deep dive into the S&P 500 because we need to use this as our staple. Even the biggest hedge funds use this as their staple. They want to make sure that they're doing better than the S&P 500. If they can outperform the S&P 500, they can. Oh, I'm wearing a tie today, so I can do that. I don't usually wear this stuff, guys. I'm feeling a little fancy today on stream, but I had my children. They were playing some musical concerts. I went there, so I'm back. And I figured, why not? Why not on stream? Why not look so fancy, right? It looks like we got, Zamora says, ooh la la. Predator, what's up, Predator? Glad to see that you're in the house, baby. Good to see you, man. But yeah, guys, so the S&P 500 is looking absolutely amazing. You love to see it. You love to see the S&P 500 creating these new higher lows. The only thing I don't like to see is the lower volume and that we're constantly pushing higher. I want to see some sideways action. I want to see some constructive action rather than just a crazy amount of volatility. Dan Bob says you clean up well. Thanks, brother. You were complaining about my hair for so long. I got a haircut. You're keeping me aligned, brother. You're keeping me aligned. I appreciate you. All right, next up, let's look at the QQQs. Now, this is what I find interesting, is the QQQs have not been nearly as strong as the S&P 500. Now, as you guys already know, if you've been following me for a while, the QQQs have led this bull run. The tech industry, the QQQs is tech, okay? It holds all of your biggest tech industries. Let me go ahead and take a little sip, and we'll turn on some lo-fi music. Let me know if the lo-fi music's too loud, and I'm actually going to take this microphone, get it a little closer. I'll put it on my tie. There we go. Yeah, put it right here. Put it right here so you guys can hear me loud and clear, baby. Yeah, there we go. Sorry about that. Okay, so now we got some lo-fi music on. In case I got to take a sip, you guys can listen to some lo-fi. But the QQQs, or the tech-heavy ETF, is what was holding on to the bull rally this past year. So in 2023, right there, the October lows of 2022, and then all of 2023 and close into 2024, the tech industry is what held this market up. Okay, that's, let me actually see here. Yeah, 2022, the end of 2022, the October lows. Then we had the, in January, we had a nice pullback to the beginning of 2023, and then we continued higher. The tech led the way. Now, when we look at tech, just currently, you can see it's not trending higher as the S&P 500 did. Now, I can tell you guys that is actually good news. Just because tech isn't leading doesn't mean it needs to lead, first of all. And second of all, it shows that there is breadth in the market, meaning the tech isn't the only thing dragging this market up. There's something else out there. Let's look at the IWM now. So IWM here is also much higher than the QQQs. Now, if you look at the overall, no, it's not. It hasn't made new all-time highs yet, and it's much lower. But if we are going off of moving averages, we can see that the small and mid caps are actually starting to get a little bit more volatility, right? Maybe not so much volatility, but more interest, let's just say. They are getting more interest. So if we can see more people moving into the small and mid caps rather than just continually buying tech, that's showing breadth in the market. You want to see breadth in the market for a healthy market. Next up, let's look at the NASDAQ, and we will always see, we'll also see that the NASDAQ is just kind of trading sideways. It looks a lot like tech. So if you look at the QQQs, you'll see it's trading mostly sideways. If you look at the NASDAQ, you will also see it's mostly trading sideways. Right now, the S&P 500 is what is leading this bull market to the north side. So everything is looking very healthy, very constructive in this situation. Now let's look at the Dow Jones. What is the Dow Jones? Well, it is the grandfather stocks. If it's been out for a long time, if it's a big boat, you're in it. It's your Amazons, it's your Coca-Colas, okay? This here also made an amazing push. As my stock market goes wonky, it's made an amazing push, much higher than the 50-day moving average, much higher. These moving averages are starting to converge. You have the 10 over the 21 over the 30, and it's starting to peer into that simple 50-day moving average. Excuse me. So that being said, that's a good sign also in the market that we don't have this lingering down here like it was previous, much lower than the rest of the market. Now it's pushing much higher, and it also is a lot closer to all-time highs than the tech or the smaller mid caps. So you see the S&P 500 is close to its all-time highs, the Dow Jones Industrial is close to its all-time highs, and you can see we're above all of the moving averages. That's such a good sign for the overall market. Now SMH, this is going to be your semiconductor. We keep an eye on this because semiconductors is part of what led the overall rally. Still trading above a 50-day moving average, but not looking as strong as the rest. Next up, now I'm going to be flying through these pretty quick, guys, so I want you to pay attention because what we're trying to do is hone in on exactly where the market's at. Then we can start looking at what we have on economic data, and then we can start looking at the stocks that are most likely to do well. And we're going to do it all in the next 15 minutes, so you need to pay attention. Make sure you stay focused here. Now, RSP, why do we look at the RSP? Because the RSP is the equally weighted S&P 500. You need to understand, the S&P 500 has many ETFs within it. We could even bring this up for you. This is the Sector Spider ETFs. It has the energy, it has consumer discretionary, consumer staples, it's got financials, utility, technology, real estate, material, industrial, and healthcare, all stuck in one ETF. That's the S&P 500 in a handbasket. But when one weighs more than the other, meaning if tech is leading the way, you don't know if the overall market is healthy, right? Music's a little high. Let me go ahead and turn that down for you, brother man. So when we look at all this, we want to know what's equally weighted. Okay? We want to know what is equally weighted. And the RSP is equally weighted. It takes all of those sectors that we just talked about, okay, and it puts them equally weighted. Simple as that, guys. When they're equally weighted, then we know the breadth in the market is healthy, and it's not just tech leading the way anymore. And right here you can see the RSP has finally made it above that 50-day moving average. Ladies and gentlemen, this is extremely powerful to look at. If the S&P 500 is doing well and we bring it to an equally weighted S&P 500 and it's above all moving averages and trending to the north side without a ton of gaps, that is a beautiful sign in the overall market, okay? Now, until things change, I'm going to start pushing on the gas pedal a little more. Now, we have to find those stocks that we want to push the gas pedal in. We need to make sure it follows our strategies, which mine is base breakouts and trend breakouts. between the hourly and the daily. And we're going to do that for you. We're going to show you exactly what I'm looking at today. We're going to show you in real time, so that way you have a better understanding of how to do this yourself. So that way you can become a better trader. And everything's absolutely free, guys. Absolutely free here. I would never ask of anything for you. So while you're here, hit that like, hit that subscribe button. That's the only thing I'm going to ask. No money, just dedication, your time, the like, and the subscribe button. I bring everything free to you, and I bust my ass, I promise you that, to make sure it is high quality content. Next up is going to be the dollar. Now, if you guys have been listening to me, you already know the dollar as an inverse correlation to the overall S&P 500. If your dollar is going down, the S&P 500 is going up. Why is that? Well, if your dollar is worth less, you want to invest those dollars so in the future they're worth more, okay? If your dollar's worth more today, then why in the hell would you want to take that dollar and put it in something that would be a higher risk? If your dollar is going down, then you want to invest that money, okay? Now, next up, let's look at Bitcoin. Why do I look at Bitcoin all of a sudden? Well, it's simple. Now that it has been inducted into the mutual funds, it's been inducted into ETFs, the institutional ownership are going to be keeping an eye on Bitcoin. If institutional ownership is watching Bitcoin, we want to watch Bitcoin. We want to ride on the shoulders of those giants. Why do I say that? Well, because if you have a small account, let's just say you have a small account of $25,000 or $30,000, or let's go smaller. Let's say you only have a $1,000 or $2,000 account. If you can hop on the shoulders of these giants that are dropping hundreds of $1,000s into one area, you can ride that same bull run with them and sneak right on out with a huge profit. So we want to watch Bitcoin as well. And it looks like Bitcoin is not doing so well, guys. With the S&P 500 being above the 50-day moving average, Bitcoin is still trailing much below that 50-day moving average. It needs some time. You can see here that I have a trend line here. It needs to not only get above the 50-day moving average, but it needs to break this downward trend line. This is looking like a big trip, and I would consider this very bearish in my overall opinion. Next up is gold. I like to look at gold. It's plain and simple. Gold has been trending to the north side. Now, we had a big pullback here, and it is beautiful to see gold start to pop up. Now, the general public has been asking me about gold, so I have been bearish lately on gold, but you cannot deny the fact that gold is looking pretty bearish or bullish at this point, breaking this downward trend line. We had a big pullback here, a pop up, and every time it pops up, but now it's making these new lower highs. Okay, you have the low here, you have a new lower high here, and it's pushed up through this trend line. So now gold is actually looking a little bit more powerful than what it recently was. Let's keep that in mind when we're looking through our overall stock market. The VIX volatility index, if you don't know already, this gauges the fear in the market. The higher the VIX is, the more fear in the market. Fear equals selling. I'll say that one more time. The VIX volatility index, the higher the VIX volatility index is, the higher the fear. The higher the fear, the more selling there is, okay? So when we get up into these areas, what do you think this is, guys? This is the pandemic. If we zoom back out of here even more, this is the financial crisis in 2007, okay? You guys remember all the foreclosure homes up? Okay, that's when people sell the most. We are at an all-time low in the VIX currently. That could spread some fear, thinking that we might have a nice little pop-up. Well, if we have a nice little pop-up, that'll give you a nice opportunity to buy. So keep that in mind. We are in a very safe place in the market right now. People are not fearful in the market right now, and things are looking overall generally well. Next up, let's look at, we won't even look at any of these right now. I do want to look at some of these tech names. So NVIDIA up. We're at 589.22. Microsoft 412.32. Looking good, but still below a 50-day moving average. AMZN, we're going to go over very shortly, but reaching a new all-time high. Absolutely love to see that. Meta actually breaking back up. If you guys weren't here, earnings, they dropped over $100, now making up for 75% of that loss. Apple, beautiful Apple here, made an awesome trend break today. So People were talking, Zamora, this one's for you. We were talking about how we could get into Apple. Well, if we look at Apple on an hourly, and I was actually just talking to, let me get out of this really quick. That looks yucky. Let me put this on the daily and switch this to an hourly, and we'll zoom in on this so it's not so yucky. All right, so guys, look at this. This is what I mean by a beautiful trend. Now, I was actually on a job site bidding a job when this popped up, so I was not able to take this trade, but this is what I like to see on an hourly trend break. So look at this. We have a beautiful push up on earnings, right? They have a beautiful push up on earnings. We see this pull back here, and we see it bouncing and getting tighter, making new higher lows. 1, 2, 3 new higher lows. It gets really tight on this last day, and in the morning it starts to break up higher. If you would have just simply played right where my alert was on this breakout, you would be up. You would be up at least $1.50 right here, and you could use now that same area that you got into either as your new stop loss or the bottom of that same day as your stop loss. That would give you beautiful risk reward in AAPL. Now, personally, the time has passed. I missed my opportunity in this, but we will show you some that I'm in a little later. Looking very, very constructive here as Apple takes charge. Google has been looking like a very strong stock in the overall market. All through the pullback, this thing stayed trailing above its 50-day moving average. It popped up on earnings, pulled back, found constructive ability to hold the 10-day moving average, and now is just trading up, okay? Let's keep an eye on Google because I think Google can still be an amazing trader. All right, guys, so now what we're going to do, I want to just keep you guys informed of what's going on. If you weren't listening to my YouTube short today, this is what's great. This is what helps me determine why the overall market is going to continue to the bull side, okay? The reason why I think we're going to continue to the bull side is because everybody is looming around the Fed rate cuts. Everybody wants to know when the Fed rate cuts are going to happen, right? We want to know, Stu, what up, baby? It's good to see Stu Clotton here. I haven't seen you in a while, brother. We need to have a phone chat, brother. I'm telling you, we got to dive deep again. Stu was one of the original people that just helped me. Every single day we would have a meeting for almost 6 months straight. And guys, you need people like that. Stu, I appreciate that. I am wearing a tie. I wore it for you, baby. I wore it for you. No, I'm only kidding. But listen, Stu and I, we came up with some awesome ideas. We've been there for each other through the thick and through the thin. You guys need to hold on to traders like that. It sucks when you first start trading. It sucks not knowing what to do. It sucks not understanding the emotion. And that's why I'm here. I'm here for you. That is exactly why this Discord is here. It's here to bring these traders together. So join the Discord, absolutely free. Never ask any money, anything except for your time. Hit that like, hit that subscribe button. Help me grow, help the community grow, and we can all grow together. Now, let's dive deep into this initial jobless claims that came out on Thursday, which I believe is today. Yes, it is. Now, the initial jobless claims came out, and it looks bad. The forecast was expecting even higher than the 209,000 previous. They were expecting 212,000. What is this? People that are filing for unemployment, right? Now they have much, much higher. You would think that that would be extremely bad, right? It would be extremely bad for the market if we're all losing jobs, right? Nobody has money to buy anything. But let me explain this to you. At 231,000 jobs lost and much, much higher than the forecast expected, that is going to show that there are less people that have money, less people to spend that money, less demand for overall prices. Those prices are going to be forced to come down because now there's more supply. With more supply shows less inflation. Less inflation, yeah, I know, stick with me. Less inflation, which by the way is at 3.5%. Right here, look at this, guys. Inflation's at 3.5%. With inflation wanting to come down, it's going to show your Papa Powell that those Fed interest rate hikes, stays at 5.5%, which is actually 5.33%, but at that 5.5%, it's going to show him that he has the ability to cut those rates sooner because they aren't going to have as much pressure on those price gouging inflation, that sticky inflation that's been around for so long. People are saying that 3% is going to be the norm. I highly doubt it. Papa Powell is sticking to It's script. He says we are bringing it down to 2%, and I truly do believe them. Maybe I'm drinking the Kool-Aid. Let me know in the comment section if you think I'm drinking the Kool-Aid, but this man seems pretty serious, and he uses the history from before to keep that in mind. Now, let's look at the Fed tool, and you might say, why are we looking at this data? Well, I promise you this. If they cut those rates, and they cut them sooner than we expect, then I can tell you right now, the market is going to skyrocket. It's been proven over the history, okay, that the market loves to rip the second that rate cuts start to come down. And you can see the volatility in the market with this bad news, right? With this bad news coming out, you can see the market starts to rip. I mean, look at it. Let's go back to the SPY and look at 8:30 when the bad news came out today. So right here is 8:30. We'll go to a 30-minute if you'd like. We'll go to a 15-minute, and you can see right here, we'll go to 8:30, boom. 8:30's here, this thing just started ripping. When it came back and retested that same area that we broke out at 8:30 when we got the initial jobless claims data, this thing rip, tater chip to the north side. Let me say it again, rip, tater chip to the north side, in case mom was listening, because I know she hates that saying. But yeah, guys, the initial jobless claims, bad news is good news right now out there. Now let's take a look at the CME Fed rate tool. In January, are we expected to cut? Only 8.4% of our analysts think that we might get a quarter of a rate cut. That's not looking very good, right? But it's much higher than 2 weeks ago. 2 weeks ago, this thing said like 1%, okay? So we're moving up with this data. In July now, if we look at July, we have a 30% chance of that Fed rate cut. But here is where I'm starting to grow conviction. Because in September, not only do we have a 50% chance of a Fed rate cut, but we now have a 17 or over a 17% chance of 2 cuts, right? By then, they're expecting that we'll be down between 4.75 and 5. So that's a half a point here, okay? That is a beautiful thing to see. And then in November, we can start to see that the data starts to become more skewed, where there's only a 19% chance that we'll be at where we're at today. So we're looking at 2 Fed rate cuts right now. That's not as good as the 3 that we were expecting about 3 or 4 months ago, but I can tell you this, it's much better than what we were thinking about back down here on this bloody 6-day sell-off. So you can see that the Fed rate cuts have a huge impact on the overall market. The sips for me, not for you. Now, with that being said, I'm going to go over with some of the things that I'm holding currently, and then we're going to go over the watch list, and we're going to finish up in the last 30 minutes on what I think are some of the really good stocks that you need to keep an eye on, that you need to keep on your watch list, because they are ripping, okay? Or if not, they are expected to rip very, very soon, all right? So we will get into that in just a second. Let's take a little peeky gander at what I'm in right now. Today, I took a breakout on the CRDL. We have a breakout right here. It also has an all-time high pulled on the anchored VWAP. So right here at this $2, at 208, you can see it broke up here. I chased a little bit at 212. I'm sorry, not 212. I chased a little bit at 218. We are holding onto this thing for a bigger expected move. We want to see this thing blow up to the north side. Why do I have so much expectancy on this? Well, you can see it created this beautiful base here. And I love these base breakouts. Me and my right-hand man, Adam, we have been preaching about these base breakouts for a long time. A lot of your top-tier traders like to play these base breakouts, like the IBM Investor Business Daily guys, the Can Slim traders, the William O'Neill traders. They all like these base breakouts. I follow a lot of them. They are all proven strategies in a bull market. And as I've shown you, we are in that bull market still. That was a correction, people. And unless it proves me otherwise, I'm going to start stepping on that gas. So we stepped on the gas on CRDL today. A couple days ago, we took SHIP. Look at this beautiful trend. This beautiful base. hovering right over this 10-day moving averages. All the moving averages line up beautifully. It broke up above. We took a trade right here at 973. It busted out to the north side. I'm waiting for a little longer. I'm going to use the Darvis box for my selling and buying. I plan on taking this and continuing to add to this as long as it poses proper, right? As long as it continues to the north side, as long as it continues to show me that it has relative strength compared to the rest of the market, and SHIP keeps on shipping me money right into my right pocket. Let that thing get fat, baby. So we have SHIP and CRDL. I exited out of ENPH today when I seen a trend change this morning. We had taken a short right here on the daily. You see this downtrend here. It broke up above that downtrend. I grabbed a short, netting a profit of 24R on this bad baby. I'm very proud to say it. We exited right around this area down here. I don't know the exact number. I was actually in the truck when I decided to exit, but I could see a trend change on this, and I decided to exit here because if we go to XOM, you'll see right away that XOM broke this downtrend here, and I did not like the looks of that. So when it broke that trend this morning, pushing up higher while ENPH started to head lower, I said, I'm not going to take that chance. I exited out of here, and I'm glad that I was staying vigilant on this trade. It netted me a humongous profit on this short sale trade. Now, this was just a 3-day swing trade. Of course, I'd like to grab something and hold it for longer. But with all of this support down here at this 106, 107 area, I decided to get out and wipe my hands clean of this trade. Next up, we are going to go through some of the things on my watch list. Now, we have Toast, T-O-S-T, beautiful daily break here. This has been trading since, what is this, 2022? Since 2022, it's created this high here that it cannot break through. And now it finally has peaked above it and now is trading sideways. So if this can form one more base on top of this base after breaking higher on earnings, we want to see this thing break through this area next. So I'm going to go ahead and put an alert here. I'm not saying I'm going to take this. These aren't buy or sell recommendations. I'm saying this is something that you need to put on your watch list because if it breaks through this top of 2730, that's going to be a very interesting spot here. So TOST, that's a new one for us. BROS, this is not something that I'm interested in right now, but if it can play another downtrend, almost like it did here, but break out to the north side, Bros, I do believe this is a coffee company, if I remember correct, but they're now starting to show nice earnings on this. I want to see it continue to the north side. So that would be absolutely beautiful. Coin, guys, I have this trend break on Coin. If Coin can show a beautiful trend break here, I would love to see it. I'm going to go ahead and put my alert down here right around this 223 area. It needs to hold this new higher low. It needs to break out of this trend, and I think we'll have a new trend to the north side. But right now, it's trading below its 50-day moving average, so not looking as good. Something I brought up last week is FSLR. This is First Solar. This is a local company that creates solar panels. We are creating a new trend here, guys. So this would be your phase 1. I'm sorry, this is your phase 3. Let me just bring it up. Here's Stan Weinstein's phase. You have your 2 is up, 3, and your 4, okay? So you can see that this is clearly as a stage 3, a stage 4. Now this is your stage 1, and we're looking at this being a new stage 2 trend, okay? If this is the new stage 2 trend, I think we have much room to go to the north side. Now, I have no way of playing this currently. This was the base breakout right here. I was not able to get into this, but our friend B. Stewie in the chat, I don't know if you're in there yet or not, B. Stewie, but I do appreciate you bringing this up to everybody in the Discord as we were going over some things, because FSLR is looking like it has great potential. And guys, just so you know, when you're listening to this live, if you have any stocks that you want me to take a look at before the time ends, just go ahead and throw it in the chat. This is an interactive chat. I want everybody to feel like they're a part of it. You get free analysis here, free big heads. I'm just a big head that's talking anyway. So whether my analysis means anything to you, if you have anything or any questions, just go ahead and ask it. Don't be shy. Don't be shy now.
We also have CrowdStrike. So if you look at Crowd, you can see here that its all-time highs was all the way back here. We can mark that, and you can see we're now trading above that all-time highs. Okay, obviously all-time highs was here, but I mean back in, what is that, 2021, the all-time highs. So we made this huge dip, and now CrowdStrike has came back up here to these all-time highs, which is also a psychological level of $300. Now, earnings is coming out here on next month on the 4th, so not too far away. We got about a month until those earnings, so this would be a great play. Now, this here has created this dip, held a new higher low from this low. Can it break up through this area? I'm going to set an alert right here. I do feel like if it breaks above this area of 335, we might have a nice continuation push to the north side. Next up, I do like to take a look at Reddit. I don't believe in this company. I'm looking for a good place to short. I just don't see where they're going to make money with Reddit, but what do I know? Next up, I want to look at M-Chip. M-Chip has this daily break right here. Look at this. Right here, a daily break. If it can break above this 94.50 area, this thing really could launch to the north side. So I absolutely love to see that. OSCR, now I believe this is in the healthcare sector. It is. Look at this beautiful cup and handle. Now, I could not play this cup and handle simply because earnings came out just a few days later. But if you played this cup and handle, you are making some big money on this, because after the cup and handle was formed and it broke up above, you're already up 26% on this trade if you could have held through earnings. Now, I don't like to play earnings. It's not my cup of tea or cup of coffee in that matter. But if you played it, congratulations. OSCR launching to the north side. So this is a consumer staple. Now, consumer staple is looking very, very nice. I do like to see this. KLG. Now, I played KLG. I played it twice. I played it once right here. We made plenty of money, got out of some of the money here, and then stopped out after it broke this 10-day moving average, netting us a very nice profit. Now, after it broke above this, I was wishing that I had played this trend to the north side on those earnings. It sold off hard and quick. I'd like to see this thing reform a new base before it heads higher. Why do I say that? Because so far, when we look at this trade, it has not made any undercuts. Meaning, if this thing breaks up higher, it gets tight on the 10-day. Breaks up higher, it gets tight on the 10-day again. And then I played it here. This here, after earnings, it broke down and finally broke its 21-day moving average. If this thing can show strength and get back up above those moving averages, I would consider that an undercut and rally. And if it does that, it's very, very bullish sign, especially in a consumer staple. The sector is hot, so put KLG on your watch list. AXON, this thing has gotten me quite a few times. I've tried to play it here. I've tried to play it here. I made a little bit of money here. This was a beautiful trade. I tried to make a little bit of money here. It stopped me out. So I'm about break even on AXON, but it does have good financials, and I would love to see this thing have some continuation here. So I'm going to set my alert somewhere in this area of 35.82. If it can break this area on volume after trading sideways for a month or two, yeah, about 2 months now, it would be nice to see this break higher on volume and have some continuation. We have EME. This is a missed trade. You can see this beautiful base here, a breakout. My buddy Adam here tried to get into this, but he was working at the time, so he did not get into this trade. CEG. Now, this is absolutely beautiful to see. CEG came out with better than expected earnings and broke this beautiful base here. So definitely one to keep on the watch list in case it wants to form a new trend, whether it's a trend break or another base break. This looks like a leader in the market. We have a few of these aerial charts, these aerospace charts, I should say. I say aerial, aerial charts, like it's a mermaid or something. So AWM is looking constructive. PPA is looking constructive, and AVAV is also looking constructive. These are all in your drone sector, right? Your aero environmental, your aerospace, your defensive type of stocks. They're all looking very, very well. They're all in one sector. So HWM skyrocket, PPA skyrocketing, AVAV skyrocketing. All definitely ones to keep on your watch list. Woo! I hope y'all speak yawn because that is what I am doing right now. AG is looking very good here too, now creating a new trend up to the north side, still a little extended from that 10-day moving average. Now, A-Lab is something that a lot of people were getting a lot of hype about. I don't know what all the hype is, except for it is a strictly AI stock. And it's been a long time since, or this is the first time this has been a strictly an AI stock. People get really excited about it being a strictly AI stock because that is the play, right? Now, we'll have to wait and see. I have my alert set at this base breakout, also a trend breakout, so it's a double whammy. And if this thing can do its thing, I'd like to be a part of it. So we're just going to set our alerts around that $77 to $78 area. 78 sounds good. NVIDIA is looking a little weak today, guys, with everything doing pushing up higher. You can see tech started to pull back. The semiconductors, as we looked at SMH, isn't doing so well. So we're going to go ahead and let that sit on the back burner, but we're not going to forget about our leader, NVIDIA, because this thing is what brought us to where we're at today. So do not sleep on NVIDIA while NVIDIA sleeps on you, okay? Now, we're going to bring up a few of the restaurant sectors. Now, oh my gosh, this looks good, guys. I really like this. So I've been dying to get into Wingspot. Now, I have a funny story. Way back in the day, the wife and I, probably somewhere in this area about a year or two ago, we went to Wingspot. We got a new one in Monroe. We tried their food, and it was absolutely disgusting, okay? Now, if Wingstop wants to go ahead and sponsor this channel, hey, Wingspot's delicious, but they're not. So to be quite honest, it's disgusting. I did not enjoy Wingspot. So we didn't invest. We decided not to invest. This thing isn't going to make any money, right? But the restaurant business is absolutely kicking some booty right now. Wingspot is definitely one to keep on your watch list. We couldn't get in this break because the earnings were 3 days later. Earnings is just ruining everything for us in the past 3 or 4 days. We haven't lost any money, but we don't want to play earnings because I find it to be a gamble. Nylish, what's going on, brother? Nylish, we are using Thinkorswim, actually, Nylish. Welcome to the chat. Glad to see you in here, Nylish. Hope you've been reading your book. If you have, let me know, brother. We also use TradingView as well. Right here's our TradingView chart. We like to use TradingView. I use TradingView mostly for the financials. It's easier for me to navigate. It's easier for me to find the volume in TraderView. So I keep a monthly subscription on TraderView. But I use my main trading platform is Thinkorswim, Nylish. So this is Thinkorswim, and you can get it for free as long as you put in a couple of bucks for an account at Charles Schwab. So great question there. This is Thinkorswim through Charles Schwab. And so, guys, I just marked this area of $400. It's a psychological level. Also, you can see it's starting to form a base here. We love to see that. The 10-day moving average is catching up. You better believe I'm getting into Wingspot, okay? Maybe I go buy another thing of wings and give them a second chance here if it starts making me some money. But let's look at the rest of this restaurant sector because there's a few more I want to take a look at. Now, this is Chipotle. Everybody knows and loves Chipotle. If you don't love Chipotle, well, you must not like, never mind. You must not like delicious Mexican food. Okay, guys, so Chipotle is amazing. Don't argue with me. I'm entitled to my opinion here. No, Chipotle is delicious. I love Chipotle, right? And they keep raising their prices. People keep paying those prices. Nylish, we're actually getting a swing green, sweet green. Is it sweet green? Simple green? Let's just move to it. Right here, earnings, baby. Earnings just tonight, actually. So look at that. New all-time highs for sweet green. Look at that. It's Wingstop, not Wingspot. Oh, thank you, Carly. I appreciate that. Yeah, Wingspot, not Wingspot. Wingstop, not Wingspot. There's actually a Wingspot around here too. I'm telling you, they have the best boneless buffalo wings, okay? They had to change their name for some confliction issues, but Stop is the ticker that I'm talking about. Thank you, Carly. I appreciate that. Now, Sweet Green, now I'm glad you brought this up, Nylish. We were going to get to it, but we're going to jump right to it. Sweet Green is a salad company, right? Sweet Green is that salad company, and that salad company has very little overhead, right? They're selling basically water with some croutons, and they're making like $10, $15 a salad, right? I've never bought one, never seen one in this area, but you can clearly see they're kicking butt and taking names right now, beating their average expected earnings. Now breaking above this whole area. So I could easily put a trend line on this. I love playing these trends. You can see in the after hours, it broke through this trend on some serious push right here. So tomorrow morning, this is definitely going to be, and I'm going to go ahead and add it right here, right now. Sweet Green is going to be on my watch list because it broke above all of its main moving averages. It's broke above its all-time high. I'm going to consider that my all-time high. It's also a newer IPO, so seeing this thing break above this. Nylish, have you ate Sweet Green before? How much is it for a salad? Just like, and do they have combos? Like if you buy a combo, like how much is it exactly? Let me know in the chat. But Sweet Green has broke above this area, and it is looking very, very healthy, if you will. So I want to keep my eye on Sweet Green tomorrow morning. Now, let's bring up Kava. Kava has earnings coming up very soon on the 28th. So we get about 20 more days until that comes out. So it's looking very healthy right now. I've been wanting to get to be a part of Kava. I want to either be above this breakout area, which came close to getting me in today, or breaking down and catching this bottom showing support. Now, we're a little extended from the 10-day moving average, so I would love to see this thing actually continue higher, breaking above, or waiting for the 10-day moving average to catch up before getting me in there. But I do like the restaurant sector, so make sure you are putting all of those on your watch list, guys. Next up is STTK. This one is just a bunch of sideways action. I want to see if it can break above this area on volume. So go ahead and put that on there. Not huge conviction. Hood. One thing I wanted to point out with Hood. So Hood had this trend breakout. I liked it, but because, again, earnings was coming out very, very soon, it broke back down. So if Hood wants to trade sideways for a few days and then have a base breakout maybe somewhere in this area, that would show constructive ability to go to that high side. Let's see. Nylish just popped in and said the stock is starting to go up since they have changed their menu and started to add combos. It has a good portion size and prices somewhere between $13 and $17. Guys, if you can charge $13 to $17 for a combo and people are willing to pay it, that is easy overhead, right? You don't have a lot of overhead there, and you're making a lot of money on water and croutons. Now, I haven't been there, so I'm kind of talking my crap, which is A-okay. I'm entitled to do that. I can talk all the crap I want to. But I wouldn't mind going and grabbing a salad from there. I just recently have been getting hip to salads. We make our own salads at home, the wife and I do. And I tell you what, we make some banger salads. So if Sweet Green can compare to my salads, let's go, baby. I'll buy a few shares of Sweet Green. All right. Let's take a look at Coupang. They're calling this the Amazon of where at? The Amazon of man, I can't tell you where now. I forgot, but it's not, it's an Asian area, and it's not the American Amazon. It's not the China's PDD, but it's Coupang, ladies and gentlemen. CPNG held up during all of this pullback, and it looks very, very good here. Still trying to trade above its moving averages, but is it going to show resistance at this $22? Because when it came out with those earnings, it was less than expected on their earnings per share. That's not a good sign for the overall market. I'm sorry, for the overall stock itself. So maybe it pops up today and it's found its resistance. This might be a nice short play for short term at least. So we have this area right here. It popped up. It's into that murky waters now. Maybe this thing pulls back down. That might be a nice short play idea, but we're going to keep our eye on it. CRS, so this Carpenter Technology broke out of this beautiful base right here, guys. I'll just point this out to you. We're training our eye to see these, guys. It followed this 10-day moving average. It broke above this base. And look at this, a simple trade as to using previous day's low. You would be up multiple R, probably 7, 8, maybe even 10 R right here on this trade. Still using that 10-day moving average as a guide for a stop loss. So that's absolutely beautiful to see. And without too much time left, guys, I do just want to bring up one simple fact here. Let me bring this up. Let me throw this in your face to see what you're going to do with it. Let me see what you're going to do with it. Let me just bring this up. This is for me. This isn't for you. This one's for me, guys. Come on. I mean, I need a little love out here, right? So let me just bring this up. Maybe you guys can do me a favor here. Let me bring this up right here. Look in front of the screen for me, guys. While we're all here, we got 13 likes already. That's amazing. Do me a favor. Look at the screen here. Just smash that like button, guys. And if you're in here right now and you haven't hit that subscribe button, I don't know what the heck you're waiting for. Hit that subscribe button. I do this all the time for you guys. I bring you the hottest data, the hottest news. I bring you those shorts. I bring you the live streams. I do it all, baby. And we also have a free Discord. We do it all for free. So if that does not bring you love, then I don't know what will. Hit that like, hit that subscribe button, guys. We love to do this for you. So thank you so much for being here, guys. Let's see what else we got. I see all the love, the sign, the symbols popping up there. Appreciate that, guys. Thank you so much. Appreciate you. All right, so let's keep on flying through this, guys, and then we are going to end on a scanner. So FIP, this might be a nice one to keep on your watch list. It created this base here. We want to see this break out on higher volume in this area. I set my alert on FIP, and we will be alerted when it does. So this thing, it looks like it is right there too. And if it does this on higher volume, we're going to love to see that move to the north side. We always like to look at some of those base breakouts that we brought up before that didn't work out, because remember, you're a loser unless you're learning, guys. You are a loser unless you're learning. You want to make sure that you're always learning from things. Even we did not take this trade, we want to see this break down. Why didn't we take this trade on these breakouts? We had earnings coming up. We don't play earnings because it's a gamble. So we're not going to play those earnings. Easy PW. Looks like it's failing. I can take this. Goodbye. It's off the watch list now. AFRM. I wanted to keep an eye on this. It did break above this long downtrend, and I did not want to play this because I've been shorting this at that trend, so I would not have my conviction. Plus, look at earnings came out, broke right back down, okay? UAL, if you guys remember, I took this short trade from here, wanted to hold on to it to the 10-day moving average, made about half the amount of money I wanted to by getting in and getting out multiple times, but we made plenty of money. We made about $1,000 here, but we could have made about $2,000 if I would have just stuck to my trade idea. Now bouncing off that 10-day moving average, just as expected, following that 10-day moving average, what will happen here? Be very interesting to see if UAL can tighten up with the rest of the market. Will it head up to the north side? Very soon it will tell us. We also have PPC. Now, Pilgrim's Pride, this is brought up by your friendly moderator, Dan Bob Dan. Absolutely. Love to see that. Oh, somebody talking about Taco Bell? Oh my gosh, guys, don't get... I love Taco Bell. I'm about to go on a night run after this. Don't get me started on some Taco Bell now. Come on. Don't do this to me, boys. Don't do this. I'm trying to lose weight. I'm up to 220, baby. Looking strong. Don't bring up Taco Bell. Come on. Daddy needs a taco. Let's go to ANF. Actually, no, I want to stick to PPC just because Dan brought this up, how it was trailing this 10-day moving average. Look at this beautiful trend break. We get a huge push up on earnings. It travels sideways, creating this beautiful base breakout to the north side. You use that 10-day moving average as your stop out, and you're not stopping out of this thing until 35.78. So you would get in at 32.57, 35.78 is your stop. Bada bing, bada boom, easy money, baby. Beautiful call out on that one, Dan Bob Dan. Love to see it. Abercrombie and Fitch, guys, I played this on the trend breakout. Absolutely beautiful. You love to see it. Of course, I still wish I was still holding this. I ended up selling out somewhere around here because the overall market was looking a little squeamish. I'm learning to hold longer on these trades. I'm learning to turn off my P&L when I trade these because I make money, but I can make a lot more money by sticking to my full trade plan. Even if I just use this 10-day moving average as my stop loss, but I wanted I wanted to lock in those profits. They say you can't go broke taking profits, but I can tell you this, you can stay at break even for an awfully long time if you don't let your trades play out. And I was actually just talking to a good friend of mine, Holy Diver, and he was talking about how much or how long he's been in some of these trades. It's like watching paint dry, he said. And I'll tell you this, that is showing patience. That is showing patience. If you have a stop loss in mind and it has not hit that stop loss, why not stay in the trade unless you need that capital for trading? It's a beautiful thing. Absolutely beautiful thing. Let's see what else we got here, guys. We got a few more minutes here, and we're going to cut out. So make sure if you have anything that you want me to look up, be sure you put that in the chat. I want to make sure we get to everybody. We hit all the comments. We make sure we bring everybody up, and we are ready to go for tomorrow. ARGO, now that earnings is over. ARGO, or this is AGQ. This is AGQ. This is silver. Never mind. Silver's looking good. FTEL, ripping, absolutely ripping. Look at this. We'll just go ahead and mark this out. This is another base breakout that we were watching. We did not take, right? Remember, we are in SHIP. We are in CRDL. We are playing those base breakouts, but we're very, very choosy. We did not take FTEL, but this is one that we went over in the Discord. Absolutely beautiful. Silver's ripping. PAAS, you can see this making all-time new highs. Absolutely beautiful. Another one that we were watching. Wave Technology, another one that I was watching, but it broke down. Vegas, now we're not going to get too deep into that. So, tomorrow, Sweet Green. We want to see how it opens up. I might take an opening range break, meaning we'll look at the 1 minute and the 5 minute candle. If it breaks above or below either one of those, we might take that trade there. Looking very good. ASPN, a beautiful one to put on our episodic pivots to trade from. We have a few other trades here. Wow, Duolingo took a big breakdown. AVGO, check this out, guys. So this is one to keep on your watch list. This thing has been trading sideways. This is Broadcom. Communications is hot right now. So Dan, we need to get a communications stock watch list as well, right? We could go through the airliners, China, retail, shippers, and rental, but those are all looking very similar right now. I want to look up Broadcom, and I want to see everything else that trades like it. So that's in the communication. So we should get on that if you have time, my good friend. That would be awesome. Dan, the greatest moderator alive. So AVGO, if it breaks up above this 1321, it's a bit more of an expensive stock. So you have to have some margin to play this one. But if this thing breaks up, it's created these new lower highs right here. 1, 2, and then maybe this is 3 before it breaks this trend, people. If this does this, this was a leader in the market on its last bull run. Maybe it can continue to be that same leader. We'll take Sweet Green for my lunch. Hope so. The stock might go up in a bit. Yeah, baby, you buy it. You let us know when you're buying that Sweet Green, that sweet, delicious salad, and then we'll buy our stocks. That way, maybe it'll go up. I think that's hilarious. And so I think that pretty much covers everything. We don't need to get too deep into these small caps. I don't think we have a lot of people watching these small caps. We do have SMCI on this trend break as well, too, guys. But like I said, we're going to need a little bit more time on tech to try and catch up to what's going on. CCL is another one. Carnival Cruise Lines. No, I lied. That's not the one I thought it was. If you guys are into those small caps, DJT, Donald J. Trump, the DJT, the Trump pump. I've been saying since the $25 area all the way down here, we've seen a large amount of volatility to come into this. I did not end up playing this just because this thing I know is just going to be all over the place. I did not end up playing it. But if you have the heart, if you have the vigilance to keep an eye on this every single day, DJT is showing some constructive area right here. This might be the best place to short, but if it breaks above this on volume, this might be the absolute best place to take a long. So we'll see very, very shortly what is going to come of that. Now, there's many other stocks that we can look at, guys, but as long as you guys aren't throwing them in the chat, we're going to look at what I want to look at, and we have looked at what I want to look at. So please keep in mind, we have no other things coming out with the economic calendar today, but next week we have PPI at 8:30 on Tuesday. Let me just throw this in your face so you can see it while I see it. PPI is going to be on Tuesday at 8:30. We will definitely be live streaming that. It's going to be very important because right after that at 10 o'clock, the Fed Chair Powell speaks, guys. When he talks and he drops that mic, sometimes the market gets extremely, extremely volatile. So keep that in mind. Now, Wednesday, core CPI comes out. That is a very, very important one, guys. When core CPI comes out, the volatility comes out in the market. So does core retail sales. The CPI year over year and monthly is going to be coming out. Retail sales, this is a big day on Wednesday next week. So make sure you understand that before you get too deep in the waters. And then, of course, initial jobless claims again comes out next Thursday. So keep that in mind, guys. And remember, the CPI is the core consumers price index. It measures the changes in the prices of goods and services, and it excludes the food and energy. So it basically takes the prices of the consumers, like what we are paying for things. Now, why is that so important? Because Papa Powell is going to look at the CPI index and he's going to say, hey, are people paying more than what they usually do? It's a huge advocate of inflation for him to look at this and think, you know, if things are more expensive or less expensive than anything. Nyla says, thank you, David and Dan, for everything. Yes, Nyla, we are just happy to have you here. We're happy to be here. We're happy to have like-minded traders reading that William O'Neill's How to Make Money in Stocks, reading and figuring out how to take trend breaks and base breakouts so our minds all in tune, so we all are bringing the attention necessary to the right stocks, right? If we're looking at a million different directions, then we're never going to make money. You're going to be so lost. That's why we do this pre-market prep, guys. So I hope you appreciated this pre-market prep. I hope this brought you some value. If it did, hit a like, hit that subscribe button. Thank you guys so much for being with me. And I will see most of you in the Discord tomorrow morning at 8 a.m. until we switch completely. We'll be switching our Discord meetups completely at 9 p.m. every single day. Every single day I'll be there at 9 p.m., okay? At 9 p.m. to do our Discords so that we do exactly what we did tonight. Exactly what we did tonight in the Discord. So guys, thank you so much for being here. Absolutely love you. We're going to end the poll. Let's see what the poll says. What does the poll say? Are we still in a bull market? 86% of you say bull market heading up. 13% of you said bear market heading down. Well, I like that. I like that we're all pretty like-minded, but I also like, obviously, having the bears in here too, because they will help keep me in line. You know I'm a bear with bull horns, ladies and gentlemen, so let's keep on keeping on, as my grandma loves to say. Keep on keeping on. We love you guys.